Hi, I'm Dheeraj. Real estate with a combined value of over $300 trillion significantly exceeds the value of global stocks and bonds combined. Yet, it has significantly lacked in tech adoption. Second, one of the biggest challenges is that it's a highly illiquid asset class. Yes, we have seen likes of REITs and other fractional ownership platforms which have tried to address this problem. In the global markets, we have seen likes of Fundrise, Roofstock. In India, we've seen likes of Strata, HBits, etc. We've been trying to fractionalize the asset class. But have you ever come across a platform which is trying to build a marketplace which allows you to purchase or own just a square feet of real estate for as low as say 10,000 rupees or $120? To shed more light on this, we have Anand, the co-founder of AltDRX, the driving force behind setting up something truly revolutionary in the real estate technology space. Anand comes from a real estate background. He's a veteran in the real estate space. He has held leadership positions in likes of ICICI, Puravankara, Knight Frank, and in the latest stint, he was the managing director of Damac Properties, one of the leading real estate builders in Dubai. So Anand, welcome.
Thank you.
And we would love to know more about what you're building. Definitely what you're building is something truly unique, truly revolutionary, the likes of which, honestly, I have not seen before. It's a marketplace. It's a marketplace in real estate where earlier there have been platforms which are trying to address the higher ticket customers, but honestly, I have personally not come across a platform which allows me to spend as little as 10,000 rupees to have a piece of real estate. So how are you doing this, Anand?
Well, to begin with, thank you, Dheeraj, for having me over. It's wonderful. I have seen some of the work that you've been recently doing. It's absolutely spectacular. Please don't call me a veteran. I feel like as if I'm 65 years old. But then, thanks for the glowing introduction. If Middle India can buy one share of Reliance, if they can go and open a fixed deposit for $500, if they can do an SIP for, again, $500 can start an SIP, and SEBI is talking about even $100, right? These are all spectacular things, right? Unbelievable things happening, But we all know real estate can create multi-generational wealth, right? Yeah. It's safer, it's low risk, It does have a lower beta than possibly equity instruments, but then over a longish period of time, it has the ability to give multi-generational wealth. The problem is Middle India can't participate in that, right? And Middle India is actually, all of us have grown to stories of, our father or grandfather saying, "Beta, I bought a small piece of land. I bought a home and it became several times in value," right? We've not grown to stories of, "Beta, I bought an office asset and I became very wealthy," right? So real estate is for growth, and we thought, listen, why we can't buy what we want to, why do you need cartloads of capital? And even if you have cartloads of capital, you go and put it in concentrated one apartment, right, in one city, one tower,
And probably I get an EMI for a 20, 30 year tenure.
Isn't it? Yeah. So it's a great asset class. It can create multi-generational wealth, but just that participation was difficult. Process was cumbersome. Every time you buy, every time you sell, it's cumbersome. You have to manage it yourself. That is cumbersome again, And there are times when let's say for example, Amravati, right? All of us know that there's a new city how often does a new city get built in a country, It's once in 30, 40 years a new city gets built. But will the common man be able to participate? Will they say, who will buy it? Who will find the asset? How will they rent it out? So capital in real estate is very, very concentrated into either investing in your hometown, the place that you grew up in, or possibly the place that you're working in. So capital only can flow into these two cities. So even though that you and I know that Amravati, a lot of things are happening, even you and I might not venture in and go and buy something out there, right? So the moment this thought came in, we said, first is everybody should be able to participate. It's a nice hat to wear to let everybody come in. It's easy to buy, easy to sell, easy to manage. at a click of a button you can buy, at a click of a button you can sell. So that's the idea behind our journey. We use the asset tokenization framework that's very supportive.
Before we get into the tokenization and the cutting edge technology, just to put into perspective, a lot of traditional platforms out there try to institutionalize this, but you have taken a very different route. You have tried to democratize it in the truest sense.
Isn't that where the opportunity is, you know?
Yeah. It's an uncharted territory.
Yeah, it is uncharted, comes with a lot of responsibilities because you're doing something new. You can't let people lose money. So it comes with a lot of responsibilities. Yeah. But then I think the true ability is to let, let's say, the person who works, the youngest one who works in our office to be able to buy 10 square foot in Bangalore, you know, 5 square foot in Pune, 1 square foot in Bombay.
And diversify as well.
Diversified as well, right? So I think the true opportunity lies in the middle and the bottom end of the pyramid. You know, that's where the true. There are enough people serving the rich, and I don't think me and my founding team thought that we could add much value there.
Yes.
And we were not private bankers. We were not serving the rich even in our past lives. We were, even though Dubai was a different story altogether. But I think the beauty is in being able to take products to people that one can't imagine, you know.
Yes.
So that's the...
And more importantly, there's one thing to own it. Tomorrow if I want liquidity, that's where the challenge comes, which is what you're addressing. The marketplace is truly revolutionary. And you mentioned about the tokenization platform. Would love to hear more about how you are enabling this in a country like India where, of course, we have lagged in tech adoption, especially in the real estate space. But tokenization has just picked up recently. So how are you leveraging that? What kind of platform you're using? What are the regulatory frameworks? And maybe a little bit of light on that.
Yeah, I think these come from very simple concepts. You know, let's take a leader like Amazon, right? You know, yeah. So many of us buy trousers on Amazon. We buy shoes on Amazon. You know, would we buy if we knew that it was not possible to return it?
No.
Right?
Yeah.
We wouldn't buy. I mean,
we wouldn't.
If it wouldn't fit, I can return it. If it doesn't fit, if it doesn't look good on my feet, I can return it, right?
Yeah.
So I think the most important thing is to let people know that when you want to, there is an option for you to walk out. It is not cumbersome for you to walk out, you know.
Yeah.
So you have to solve exits. Yeah. The problem is not in entry.
Yeah.
The problem is in, okay, if I buy and if I don't like it, if it doesn't perform, or if there are better opportunities that are coming in, how can I move out and into something different, you know?
Yeah.
So we said, let's solve exits.
Yeah.
Real estate was easy to buy, difficult to sell,
yeah.
you know. So how do we solve exits? And the way to solve exits is to create like public markets kind of a marketplace, right? You know,
yeah.
So imagine you had Reliance shares and you didn't have a stock exchange, you know. What you're holding is valuable for sure,
True.
But how will you know what is its price, what is it? So we said, if you're creating a marketplace, people should be able to enter in and exit at their choice, not at the manager's choice.
Understood.
You know, a manager's choice is decided by their own personal motivations, you know, carry, profit share, you know, oh, my fund life is closing. So immediately what the underlying asset is doing well or not, whether do I need my money back right now or not? I don't need my money back now. I want it to continue to grow, but still the money is disbursed and given back to you, right?
Yep.
So we thought we should do a marketplace where the power is with you to decide when to buy, where to buy, how much to buy, when to sell. Everything should be with you, and we should use tech to.
Yeah, but for that, it's important to have enough number of users on the platform so that it becomes easier to get that exit. So how are you building up that marketplace?
Yeah, truth of the matter is, you know, I think we should accept truth at the face of it. Are we deep? No, we are not deep. We are 12 months old since we launched this marketplace. There's a lot of excitement. We are a shallow marketplace, you know. So was other capital markets when it started, right? Yes. Look at how much time it took for capital markets also to become deep, you know. So it will take its bit of time. But the beauty is, listen, if you take an apartment, you know, now you bought one apartment, let's say with Brigade in Whitefield, in Brigade Technopolis, in Tower A, in 4th floor, looking at the swimming pool, you know.
Yeah.
So you bought that because you like it. Now when you have to sell, you have to find somebody who wants to invest, who has 1 crore, wants to invest in Whitefield, Brigade, Tower B, that's 7th floor.
Definitely
so
a cumbersome process.
It's a freakishly cumbersome process, right?
Yeah.
But the moment you tokenize it, you know, now suddenly it's become 1,000 square foot apartment has become 1,000 tokens, you know, and it's possible for you when to sell, you know, to punch a sell order to sell 10 square foot, you know, or 500 out of your 1,000 square foot. Now, it has automatically improved your chances of liquidity. So if you, the fact of the matter is when you're trying to punch a 500 sell order, maybe 500 will not get sold immediately, maybe only 200 will get sold, you know. But that's the, so are we as deep as capital markets? Hell no, we are not as deep as capital markets, but I think hopefully with a lot of effort, a lot of brand building, you know, a lot of doing things right, you know, don't be extravagant, don't bring in risky products. You know, for us, safety over returns is a fundamental matter. Returns do not, returns are, yes, important, but safety is more important.
So, more important. Especially with owning a house, safety and liquidity is primary.
Correct.
When you're looking at from investment point of view. Correct. Returns will happen. Of course, the yields, the rental yields are there and appreciation over time, we know that.
Correct. So the moment you tokenize, it has become more liquid than a traditional form. But is it as liquid as capital markets? No, the answer is no. Is it as liquid as Infosys? Yeah, of course not, you know. But it will get there, right? You know, it's a process.
So what's happening in terms of the regulatory landscape? How is it shaping up, especially in a country like India where these technologies are quite new? Although blockchain as a technology is not new, it's an amalgamation of already existing technologies which we've been seeing for a long time, like the peer-to-peer lending, the peer-to-peer video and audio sharing technology, which your distributed ledger technology, and also the cryptography technology. Someone has just put together, and that's how blockchain or tokenization even came to life. But in terms of seeing it from a perspective of real estate, how are we seeing it, and how is the regulatory landscape shaping up? And of course, you're riding against the tide currently, but in the long run, we do see this, being at the forefront of truly enabling liquidity in real estate. So how are you seeing this?
Sure. I mean, there's a great deal of work that's happening on asset tokenization. Just before we started off, I showed you a little video about some of the regulators talking about blockchain and tokenization, right? You know, I think fundamentally earlier on, let's say about 14, 15, maybe 24 months back, if you talked about blockchain, people are going to say, oh, cryptocurrency, right? You know, that's the immediate association with blockchain. Now, I think most people, not just the users, but stakeholders, you know, regulators, you know, bankers, all of them have learned to differentiate that crypto is the so-called undesirable, you know, so which is, I mean, no regulator likes it, no sovereign likes it. It doesn't have an underlying. It's a gambling den, right? You know, so that's one asset class. The other one is use the same tech, but as long as there's an underlying real-world asset, you know. It could be real estate, it could be an antique car, it could be an MF Hussain painting, it could be a yacht, you know. How can these high quality assets, which are not extremely large for it to tap into capital markets, you know, but they are large enough, they're mid-sized, they are valuable, you know, but they're illiquid, you know, how can people participate in that, you know? So this asset tokenization is basically coming in and filling that gap. You know, and most regulators around the world, whether it's MAS in Singapore, you know, SEC in the US, you know, DIFC in Dubai, QFC in Qatar, you know, our own IFSCA in
the newly
GIFT City,
incorporated financial corridor.
Correct. All of them are either already passed regs on asset tokenization, calling them a security almost, you know, that an asset-backed token is nothing but a security. It's like a share bond, debenture, pass-through certificate. And then they're creating ancillary regs around who can deal with it, who can you distribute it to. So these are all interesting developments that are happening. Our own IFSC, we are part of the IFSCA sandbox.
Wow.
We are one of the first real estate tokenization platforms to get admitted into the sandbox of IFSCA in GIFT City in Gujarat.
That's great.
Yeah. So I think regulators have learned to appreciate it. They have to look at this in 20 different ways, right? There are, I mean, like they say, regulators sitting at the top of the hill. He can see what's there on the other side of the hill.
Yeah.
You are climbing the hill, you can see only one
Yeah.
part of the face of the hill, right? So their job is an enviable, almost thankless job. I think they have a great deal of responsibility on their shoulders. So I can understand that it might take time for these frameworks to come, but they are.
But quite
they are
promising
there.
to hear
They are there.
that IFSC is enabling this infrastructure and sort of promoting it as well. And some reports do suggest that by 2030, about 8 to 10% of the global assets will be tokenized. So is this the start of a new revolution, and real estate is leading the way?
Absolutely, Dheeraj. I mean, look at it. When you're going back home, you're driving back home, you look at both sides of the road. Yeah. Look at the left, look at the right. Okay, these are all mid-sized assets in real estate, right? This building that we sit in, tomorrow if this owner decides to sell it, it's a 60, 70 crore building.
Yeah.
How many people are there today to buy a 60, 70 crore building?
Very few. Liquidity is the challenge.
Liquidity is a challenge, and that's why all this cash, fish, and all this other undesirable elements come into real estate, right? The moment you can tokenize it, bring it to mainstream, many people can participate. But people will participate if they know that it's easy for them to manage it, easy for them to exit, So I think a great deal of assets will come in. Ideally, high quality, mid-sized assets is what asset tokenization framework will kind of unknot and give it to the common man.
Got it. But how difficult or challenging it is to ride the regulatory frameworks in India?
Regulatory frameworks around the world are the walls are fairly tall to climb, but there's no other way. You have to get yourself regulated. You have to go and talk about yourself to the regulator.
Yeah.
People have to know the intent. You have to get good people in your advisory board. Like the ones that we have. Extremely eminent people, so that their wisdom passes on to us. But I think regulators have an open mind. Far more open mind than what one would imagine.
Yeah.
So I mean, imagine if IFSCA in India. Can one imagine that you and I can not just buy 1 square foot in Bangalore and 10 square foot in Pune. Once we get our full authorization, God willing, we will be able to enable you and I to buy 1 square foot in Dubai, 10 square foot in Singapore, 20 square foot in Sydney, Similarly, I mean, reverse capital flow, an NRI, a PIO, who wants to buy into real estate but hold it in US dollar terms, they can participate in assets. Foreigners can participate, There are various combinations. Obviously, there are steps to this. It's not going to be a one brush and everything kind of gets opened up. But then the opportunities are just the outcome is unimaginable. So it's very exciting.
But Anand, what I actually like is you have definitely the first mover advantage, and I have not come across anyone who's doing this in real estate currently, at least in India. So it's quite promising to see this. And one more thing I would like to press upon is you are trying to create a category. And what I really love is, so far you're able to garner interest from 36 odd cities, what you just mentioned prior to this conversation, which is truly phenomenal. How were you able to crack this, where people are yet to come to terms with what is tokenization, what is blockchain technology, etc. How have you been able to crack this?
I think it's the power of the proposition in my mind, and I think we've done a great deal of, responsible work, Like, I mean, when I've launched a basket of assets, we take a lot of care to ensure that the basket contains good names. It contains apartments from Brigade, from Godrej, from the marquee names. The moment you do that, a common man sitting somewhere in a small town still says, "Hey, listen, I wanted to always participate in Bangalore, but here is it's the sheer access. That suddenly there is an access for them to participate in Bangalore real estate or a Pune real estate, and the portfolio has really good names. They are ready assets. The risks are low, and you can participate in quantums of your choice. I think it's the power of the proposition that is powering. You have to now talk about us more. So to that effect, we have 3 of the largest media houses in India who are going to back us and come into our cap table.
That's incredible.
So hopefully we build this category. How Amazon and Snapdeal built this category built online shopping category in India. We hopefully build the digital real estate category in India.
Got it. So what has really worked for you is you're truly empowering someone, say, sitting in Mysore, from Indore, from Nagpur, to have a piece of real estate across the country, whether it's in a basket of, say, asset classes, or a house in Bangalore, a house in Goa. So essentially, I'm diversifying my risk. My capital is not locked in for forever.
Correct.
And by facilitating the liquidity aspect of it as well, by creating a marketplace where I can sell it, I think that's what has worked well for you so far. But how have you been able to create that awareness? Is it driven by digital media?
Yeah, so far it's been largely content-led strategy. Avinash, one of my co-founders that you met, he drives that and he does a great job of it.
Yeah.
And largely it's content-led, social media-led strategy. But now we are more confident to talk about us a little more strongly now that we have enough products on the platform. Critical number of users have come in and we've ironed out some of the chinks in our platform. Now we are more confident to talk about more strongly, and that's why we have the likes of Times of India coming in and investing in us, and hopefully we build our media messaging from there.
Got it. But typically we have seen majority of it, even the REITs, for example, focused on commercial space. Even the other fractional ownership platform, not all, but at least majority of them focus on the commercial segment. In residential, I think this is something new.
So demand dynamics are extremely different. So if it's growth, I think there is no better asset class than Resi. It's far more liquid. If you put in 10 crores, it is 10 apartments.
Yeah.
Right? So you want to sell, you can sell one of it. It is liquid. Even at its traditional form, residential is far more liquid. You can put 10 apartments in 10 different parts of the city. Again, diversification, So I think REITs are a great opportunity if you go to grade A assets, go to capital markets, if you think annuity income is what you need, I think REITs are great. But if you think growth through real estate is what you need, it's Resi.
And that's where the white space is in terms of liquidity and creating a marketplace in general.
That's correct.
So how do you do it, just for the benefit of the audience? How do you do it? So you create an SPV, or the special purpose vehicle, which buys this property, and then you tokenize the shares in SPV?
Yeah, no, not the shares in the SPV, because shares are securities. We don't tokenize securities at this point of time. So SPV is true. So what we do is the founding team has a great deal of experience in real estate. So we put our heads together and say, okay, where's the next great opportunity in Resi real estate? So we say, all right, let's say Goa holiday homes is great. We say, all right, let's launch Goa holiday homes as an opportunity. We set up one SPV for that. That SPV will buy holiday homes, which is residential apartments across Goa. Let's say a basket of properties. Let's say it buys 30 apartments, 30 crores, different parts of the city, diversified basket of assets. That SPV ends up owning that assets. Investors own the SPV. The SPV issues these tokens. The tokens just are like REIT units. They capture the economic value of the property. The title is with the SPV. The financial value of the property is written into these contracts, and people buy these contracts. If the SPV owns a 1,000 square foot apartment, 1,000 contracts are issued by the SPV. If it owns a 10,000 square foot property, 10,000 tokens are issued. So you buy one token, you are in essence buying one square foot's economic value. But the property title itself is with the SPV.
Got it.
So when the common man buys it, we ensure that the square foot is already underneath.
Understood.
So when they buy 1 square foot in Goa, there is 1 square foot in that SPV owned by that SPV.
So it's not essentially, does not come under the purview of SERA and the others, because it's a token and not a security or a share for that matter.
That is correct. So the instrument, in tokenization, there is always something called an underlying instrument, because all tokens are backed by an underlying asset. The underlying asset is not a security as per SERA definition. So hence it's not a derivative instrument of a security. So These are not security instruments. So
Understood. But how does someone, say from a tier 2 city who has limited knowledge or about this, how do they feel secure about this investment? Is it the immutability of a blockchain technology, or how do they feel secure? How do you ring fence this?
I think it has to come with a lot of educative structure. But like I said, I mean, we say we don't sell a property. We don't sell an apartment. What we sell is a city. We sell, hey, listen, do you think Goa is great? Here is an opportunity where there is one SPV which owns 30 apartments, 30,000 square foot. Now you can buy 30 square foot from it, or 300 square from it, or 3 square foot from it. Is your choice. So, so you're buying a fraction of a 30,000 square foot portfolio in Goa. Now you can buy a fraction of Goa, you can buy a fraction of Ayodhya, you can buy a fraction of Amravati, you can buy a fraction of Bangalore, wherever you believe your conviction is. All of us tend to have conviction. Everybody has a view on real estate, right? From my grandmother to my 15-year-old boy, everybody has a view on real estate.
Yeah.
So you go with your conviction. We support it with data. We support it with a lot of disclosures, valuation reports, title information, and people are able to take the call. But fundamentally, people believe that it's a ready asset. It is a basket of assets. Even if one apartment does not do well, it's still a basket. It's diversified.
Like a mutual fund.
Yeah, I mean, we have
to put it in a.
I mean, yeah. So yeah, it's a basket. I mean, I don't want to. I have to tread carefully in terms of my choice of words. Mutual fund is regulated.
Yeah, but in essence, in terms of the structure, wherein it's diversified across multiple.
It's diversified. It follows the principles of good financial practices. Diversify your investment. Lower your risk. Even if one asset goes bad, the basket can take the shock of it. So now you're not only able to distribute your investments across multiple cities, and each city, whatever you put, is also a basket of properties.
Yeah, and one more very critical aspect is you do the heavy lifting in terms of managing the property, because if I were to own a house somewhere, how on earth, if I'm able to own a house in Goa, and if I'm in Bangalore, how on earth would I manage that property?
Isn't it? I mean, imagine the tenant calling and saying plumbing is not working in the toilet, right? So yeah, a lot of heavy lifting is done from a property management perspective. So we find the best guys in a particular city, and they take care of assets in every city. We are also not present everywhere, but our job is to find out the best property manager in that particular city and oversee him to ensure that he does a good job of taking care of the assets. Whereas the property taxes and other things are taken care of centrally, the actual physical asset management is taken care of at a ground.
So you identify the property which is to be bought, you manage the property, you also provide a marketplace where someone can exit the property or trade the tokens as well.
Correct.
And so you're basically taking care of end-to-end value chain of the real estate.
All this while simultaneously ensuring that we are not a discretionary platform. We are not somebody where this customer comes and says, here is 10,000 rupees, do what you want. No. Yeah. Okay. The SPV1 decides upfront what are the boundary conditions within which it will acquire properties. Yeah. Every time the SPV is acquiring a property, all the investors in the SPV have a right to vote to decide whether should we buy this property or not buy this property. So the control of what kind of assets into which my SPV is going to invest is in the hands of the user. Wow. We facilitate it. We do our little due diligence. We say, hey, great asset. Here's the due diligence. Here is the market report. Here is the evaluation. It is as per the originally conceptualized type of assets that it will buy. But still, listen, it's choices with.
So that's important to instill the trust in the hands of.
Correct.
And empowering the users as such.
Correct. I think it's. More often than not, we keep hearing that, retail investors don't know about things. You and I are retail investors, he is a retail investor, right?
Yeah.
I mean, I think retail investors are today well-read, they are knowledgeable, and they will tend to invest in a city that they are comfortable knowing. More often than not, they'll know more about that city than you and me, So I think what better way than to have them decide, all right, is this still a good asset to do it? So I don't think patronizing is right. Give the power to the user for him to decide what's good for them.
Yeah. And in terms of business, while I have seen a lot of fractional ownership platforms typically run as a fund management business wherein they get their regular fund management fees, etc. So how does AltDRX work? So how do you make money? Because I did notice that your business model is quite interesting. It's very different from what I have personally come across. So how do you as a business create that model and make money?
So we are not a fund,
Yeah.
we're not, our principles are not like a fund. We are not a fund manager who has discretionary powers, we are at the mercy of what my investors ask me to do. So our economic model is called tokenomics, which is the economics of tokenizing assets. So every time a token is generated, which is every time an SPV buys a property, some tokens are generated, right? So if it buys a 1,000 square foot property, 1,000 tokens are generated. If it buys a 10,000 square foot property, 10,000 tokens are generated. Every time a token is generated,
sorry to interrupt, but token is essentially a share, or you would say a part of the property.
Yeah, share as in, it's not the share that gets traded in stock markets. So that's not. It's a contract. It's a contract which gives you cash flow rights on the SPV. When the SPV is getting rent, I get 1 square foot's proportionate rent to be payable to me. So SPV is contracting with you. You bought the contract. SPV is telling contractually whatever rent that I get, proportionate to 1 square foot, I'll have to pay to whoever is the holder of the contract.
Got it. So proportionate to my ownership, I get the returns on whatever is generated by the asset.
That is correct. Whatever the actual, there's no guarantee, nothing is there.
Got it.
Whatever the SPV is generating as rent, it comes to you. Tomorrow the SPV sells the real estate, whatever sale value that comes in, proportionate to 1 square foot. If you hold 1 square foot contract, it will come to 1. If you hold 10 square foot proportional contract will come. Okay. That's what. Got it. That's what it works. Sorry, what were we talking about? I forget.
About the business model and how.
About the business model. So every time a token gets generated, unlike a fund manager, where you pay the fee and the fund manager takes the money out, and he is free to do whatever he wants to with his fees. What we do is we get some tokens in the same SPV. Okay. So where the customer is investing to buy these tokenized instruments, we get a small percentage of the tokens given to us in return for all the services that we render today.
For all your efforts.
Correct. All my services that I render for today, prior to the SPV and post for the next several years, whatever services that I render, I get in the form of token. I also get some square foot, in short. So I am also as invested into that SPV as anybody else. So if there is some danger to the property, I'll have to run before because khud ka paisa hai udhar, so I'll have to run and take care of it. So I think
your skin in the game.
Yeah, it's a little more blended approach. And every time a token gets bought and sold, we are the broker,
Because you're providing the marketplace.
We are providing the marketplace, so we get a brokerage fee,
Got it.
So a nominal brokerage fee that anybody else will pay.
Got it. And annually for say a share of profits or a share of whatever the yields are in the property?
No, so if I hold, let's say, apartment is, let's say, 1,000 square foot, for example, 10,000 square foot Goa properties, there are 10 apartments, let's say I hold 100 square foot out of it, which is my service fees that I've got. If rent is getting distributed, I'll also get rent to the equivalent amount of 100 square foot.
Understood.
So
Understood.
That's the way.
So to summarize, one is the skin in the game, and proportionate to the skin in the game, the equated income of that you get. Yes.
So it's my job to ensure that the asset performs well. I can sweat it out as much because finally my fees is also based on how much the asset is able to generate.
And because you're providing the platform brokerage fees as well you get.
Yeah.
And also one very interesting aspect you were mentioning was that you would white label this platform so that tomorrow someone else wants to list, which is not part of say alt platform, the assets are outside it, but you still enable, which is what you are giving to the ecosystem.
Yeah. So the founding team's greatest inspiration is NASDAQ, What a fantastic institution they've built, right? So we all know NASDAQ as this iconic stock exchange in New York, right? Yeah. But Dheeraj, did you know that 70 or 80 stock markets around the world run on NASDAQ's technology? Entire tech of stock exchanges, Indonesian stock exchange, Chilean stock exchange, Ukrainian stock exchange, stock exchanges around the world, the core tech is run by Nasdaq's core tech.
Wow, I wasn't aware.
You weren't aware, right? So
I was in the impression Nasdaq is a standalone exchange in itself and runs its own operations.
yeah, so that's I mean, partly true, right?
Partly
they have
true, but-
one exchange, one iconic exchange where all the B2C learnings have been there. They've built modules. The core tech was built there, but they have another business called Nasdaq Markets Technology. Which is they've basically taken the tech from their exchange, what they built for the core exchange, and said, if my exchange can work on my technology, why not an Indonesian exchange?
Yeah.
Right? And they've gone and given their tech out to people. So while I'm not a stock exchange by any stretch of imagination, I'm just a marketplace. But I have built a marketplace. It's working well. People are buying and selling. I have a lot of understanding of how to make this work.
Yeah.
Now I go to, let's say, Dubai, or go to, let's say, Saudi, for example.
Yeah.
Now who knows AltDRX in Saudi? So they're not going to come to AltDRX and buy 1 square foot. So I'd rather make a SaaS platform, monetize my core tech into a SaaS platform. So outside of India, we are going to be based out of Qatar Financial Center. Qatar Financial Center has admitted us into the digital assets program. That country is doing a lot of work in digital assets, asset tokenization framework. We're already part of the thing, and we are expected to get a license called a TSP license, a token service provider license. So from there, we build our SaaS platform. So we go to, let's say, NEOM, the guys who are building the line in Saudi, or go to Emaar in Dubai, and say, listen, we will help you tokenize your assets. So there's a building, 100 apartments. They are trying to find one buyer for one apartment. Now I'll say, okay, 40 apartments you tokenize into 40,000 square foot. Now on Emaar website, emaar.com/real estate tokens, customers can come and buy. If they don't want to buy a full apartment, they can come and buy 100 square foot. That tech is powered by us.
Wow.
That platform is powered by us. And we are a licensed operator under QFC.
Understood.
So that's the way of one B2C kind of marketplace in India and one B2B SaaS kind of a platform outside of India.
So you're basically providing the architecture to enable or facilitate the transactions and buy and selling of tokens.
That's I've learned a few things from you. You've learned a few things from me today.
Yeah, great. No, it was a great conversation, and I have to admit, what you're building is truly revolutionary.
Thank you.
And I personally believe that tokenization is one of the most promising ways to democratize access to real estate, something which the industry has been yearning for a very long time now. And of course, we are seeing green shoots in this space. One of the biggest hurdles was the regulatory aspect of it. A lot of skepticism on the regulatory aspect. People are wondering, how is this possible? And for a lot of the folks out there, cryptos and blockchain were the only association. No one really thought that blockchain expands and extends to real estate as well, and which can truly provide an immutable platform. By immutability, I mean that truly secured platform where the very limited scope for making any amends and the original shape and form can be retained. Having said that, this is very promising, and this is the way forward, and really love what you've been building and AltDRX, and all the best to you, Anand. And
Thank you,
it was a great conversation.
Absolutely. Likewise, I think you guys are doing fantastic work in the prop tech space. I think it's great to see somebody having deep conviction on how property and technology are merging. So you're at the forefront, and you're taking the flag and keeping it flying.
Someone has to do it, because honestly, this is a space which is least penetrated in terms of technology. And just to give a perspective, while in terms of construction, it has only experienced 1% productivity growth in last 2 decades. When you look at manufacturing and other spaces, they have seen about 3 to 4% productivity growth. Now, just 1% growth, there's a dichotomy there.
Especially considering half the household wealth in India is in real estate. Yeah, so.
And when we just started this conversation, the global stocks and bonds are lesser than the combined, the value of real estate.
Yeah. Real estate is larger than stocks and bonds put together.
Yeah. And they are highly liquid, highly traded. This has not been touched at all.
Yeah.
So you coming out there and doing this with your experience and with your credentials, I definitely see a bright future.
Well, thank you so much. We'll try and put our heads down and do it as responsibly as possible. And hopefully, like what Nasdaq has done for the world, hopefully an Indian company is able to power tokenization of property owners around the world. That'll be a great thing to
witness.
Great thing to leave for my kids and for the country,
Future
hopefully,
generation. Thank you so much, Anand.
Thank you.
Yeah, wish you all the best.
Absolutely. Thank you so much, and lovely talking to you, buddy.
Thank
Cheers.
you.